Hello, everyone. My name is Joe Capitelli. I'm the general manager for Dow Jones Newswires. I'm very excited to bring you today's webinar titled How Dow Jones Newswires Does It, Market Moving Scoops. The webinar will be hosted by Chip Cummins, who is Newswires chief editor. Chip will be speaking today with Dana Cimilluca, the Wall Street Journal's Wall Street bureau chief. Dana manages the team of reporters and editors which cover banks, hedge funds, private equity firms, and handle a lot of our M&A and IPOs. Dana and his team have broken some of our largest scoops and market-moving stories. I hope you really enjoy the webinar. Now I'll hand it over to Chip and Dana.
Thanks so much, Joe. And it's really exciting to be here speaking from the newsroom. It's great for editors and reporters like Dana and I to be able to talk directly to subscribers. We don't get that chance that often. And so it's really great to be able to do that and share what we do, explain how we do it. So we thank you for the opportunity. We're going to try to do some more of these down the line, but we thought we would start with deals simply because we know that in terms of impact, these are some of the most important, if not the most important, sorts of stories we can do for you. And for us as reporters and editors, and Dana will add a whole lot of color to this during the webinar, but they are some of the most exciting journalism we do as reporters and editors. They're high stakes, they're highly competitive. There's a lot of pressure to get them right, to beat our competitors. And there's a big human drama element to it, right? A human impact. A merger means potentially tens of thousands of job losses in many cases, unfortunately. Any sort of combination is going to be, one big ego CEO losing out to another big ego CEO, one board, negotiating with another board of who's taking control, et cetera. So there's a lot of drama. They can be really fun, really exciting. And we'd like to share that excitement with you today. And luckily, we have Dana, who is really responsible for building what has become a true franchise of the Wall Street Journal. Deal breaking. If this is important to you, you have to, our readers value what we provide. We are a key player in this space, and that's largely thanks to Dana, who started off many years ago. He can give you some color on that as a deal reporter in London and then in New York, where he was essentially the go-to byline for all the big deals of that era in the U.S. More recently, he's built an extremely strong deals team around him, in which you continue to see his byline, no doubt, but he's brought in to our organization some really fantastic and talented deals reporters. And most recently, he's been promoted to one of our highest leadership roles in New York as the Wall Street Journal's Wall Street editor. So I am going to dive right in. We have a Q&A facility, so if anyone wants to throw in some questions during the course of this 45 minutes or so, I will remind myself to look for that. But in the meantime, I wanted to get the ball rolling with a couple of questions to Dana. First and foremost, Dana, if you could just kind of start us off with how you got into this business. Did you always want to be a deals reporter? And tell us a little bit about what your team does now.
Okay, well, thanks, Chip. I wouldn't say I always wanted to be a deals reporter, but I'll for most of my 25-year career in journalism, I have reported on or edited deals in some fashion. The way I really got into it is before I joined the Journal 17 years ago, I was at Bloomberg for 7 years. And one of my first assignments there at the beginning of the century, so 2000 to 2005, was to be a telecom reporter. And if you all will remember, that was a time when telecom companies were furiously consolidating. And to be a telecom reporter was essentially tantamount to being an M&A reporter, if you did the job properly. So that's how I really got a taste for it. And as Chip said before, for the fun and the excitement of it. And so it was a relatively easy transition from that to being the actual M&A reporter, which I did for a while, both at Bloomberg and the Journal, before I became an editor. And now, among other things, as Chip said, you sort of can never, get entirely satiated. So I still do a little bit of M&A reporting, in addition to editing and managing and coaching and all that.
And tell us about your current team. It actually extends beyond M&A. We'll focus on M&A, but what else does the Wall Street editor at the Wall Street Journal do?
So as of relatively recently, we used to have a standalone deals bureau which focused on M&A and other deals like activism and IPOs. And what we've done within the last year or so is we've merged that with a separate bureau that was focused on banks, JP Morgan, Morgan Stanley, Goldman, just following, all the twists and turns. We merged those two bureaus together. And we also along the way picked up remnants of the investing bureau. So that's why, as you said, Chip, we don't just chase deals nowadays. We also cover the banks that do the deals, and the investment firms that invest in the deals, whether it's private equity or hedge funds. And it's a group of about a dozen reporters. There's a couple other editors besides me.
Excellent. So as you're working as an editor, as a manager, what to you distinguishes a promising deals reporter from, another sort of beat reporter, an industry beat reporter? You mentioned telecoms. Is there something that you look for, or something that you can kind of get a gut instinct right away that this person is really going to be a scoop machine?
Yeah, it's actually very simple. I've always said there's only a small number of boxes that you have to tick to be good at this, but a surprisingly small number of people tick all the boxes. And the boxes are, first and foremost, just hunger and desire. The people that have done well at this are all insatiable. The current M&A reporters, Laura Cooper and Lauren Thomas, they will get a scoop and then they will not even spend 5 seconds resting on their laurel. They'll instantly be talking about where the next one is. And that's crucial. It's a simple thing, but it just desire and self-motivation is really as important as anything. You have to be good with people. These reporters, and we can get more into this later, but they spend all their time, if they're doing their job properly, as these guys thankfully do, getting out there and meeting sources, because when you're a reporter, you're only as good as your sources, and especially if you're an M&A reporter. So you have to have a knack with people, with getting people to trust you, getting people to be comfortable with you. But let's not forget, the information that you're effectively asking them to give you is incredibly sensitive. You're asking them to take an enormous risk by giving you information. There's beyond that, you obviously need to have an understanding of M&A, which can be quite complicated. But I would say really the two most important things are simply the hunger and the ability to get to the right sources, develop the right relationships with them, and know how to get this information out of them, because it's most definitely not a science. It's definitely an art.
Great. Appreciate it. There is a question from the audience that ties in a little bit in here to what you were just saying, and something, Dana, you and I spoke about briefly yesterday when we were talking about this. And that is, there's a lot of routine that goes into this, a lot of methodology, I'm sure, a lot of good habits, a lot of gut instinct. But I think you had mentioned that a lot of the day of your deals reporters is spent chasing down leads or chasing down rumors that ultimately are dead ends. And the question I have from the audience is, do you believe that there's a lot of how do you quantify the amount of bad information out there? And do you think there are drivers of that bad information? In other words, is there kind of intentionality in some of the bad information that you hear out there? People trying to sway you or other deal reporters in one way or the other?
Okay, I would say simply yes. That's a definite yes. And then on, how much, it's probably like 80-20 or 90-10 between the bad information and the good information. And, I would add to what I was saying before that, persistence and patience are crucial for a successful M&A reporter. We, as I was telling Chip earlier, we probably run down 9 dead-end roads before we find one that actually goes somewhere. And even the tips that sound the most promising, because, we differentiate between the sources of the tips, over time, what kind of person, tends to have good information and what kind of information source, tends to have information that's not so good. But you'd be surprised how often the people who you think have good information and how many times you think, oh, this is a great tip, this is real, we're going to confirm this and have a dynamite story. As you run around and try to confirm it, you discover, no, actually that wasn't a good tip. On the intentional misleading, there's unfortunately a lot of that as well. We get a lot of, and I know that we're not alone here at Dow Jones and the Journal. We get a lot of anonymous deal tips, and that didn't used to occur. That's a relatively new phenomenon. I'm not sure what exactly causes it, but they're actually a real issue for us because you have to chase them down because sometimes they actually end up being real, but very often they don't. And you always have to wonder and be suspicious of somebody who's coming to you with information and not telling you who they are. Most of these stories, as you all will have noticed, are anonymously sourced. One thing that's unique about us, it's not that other bureaus and other reporters and editors don't use anonymous sources, but we use them more than anyone else. And we can get into that a little bit later if people want to. But that of course does not mean that we don't know who the sources are and that we haven't thought very carefully about whether they're reliable. That's one thing. Another thing is someone comes to us and we don't even know who they are. So we handle those with extreme care. And we find that very often those tips are wrong. And when those tips are wrong, it's hard to escape the conclusion that someone's trying to cause trouble. Someone wants us to do a story that's going to cause the stock to go up so that they can sell it. Unfortunately, I think there's a lot of that goes on.
Excellent. Relatedly, I think there is a perception, sometimes even in the newsroom, that these deals, some of which are huge and hugely impactful, are handed to you and your team on a silver platter. I know that's not true. Can you kind of color that? Is that something that in the 2 decades ago, maybe that happened more often, and maybe color in a little bit of the competitive landscape out there? The Wall Street Journal, maybe 30 years ago, was a place that you would bring a story to. We know that that's not true anymore. Can you fill in the blanks there?
The way it used to work is the field was much less competitive. The Wall Street Journal, in a way, essentially invented M&A reporting. Chip was very kind to say that, I built this, but in reality, it was built long before I got here. It's just my job to be a steward of this great, deal-breaking machine that we have. But it used to be much different. You only needed one M&A reporter 25 years ago. Now it's a team sport. We have a team. Bloomberg has a team. Reuters has a team. The FT has a team. So back in the day when there was less competition, it was much more much less chaotic and much more genteel. And if you were the M&A reporter at the Wall Street Journal, and deals always used to be announced on Monday. You might notice that doesn't happen quite as much as it used to. And we can get into that also. But the way it used to work is if you were the M&A reporter, you got a call, from a lawyer or a banker or a PR person on a deal on Sunday afternoon, and you got the story all teed up. And we never thought about this thing called like the internet. I'm not even sure how much the Newswire came into play. The name of the game was the newspaper, and you'd tee the story up. You'd write a nice, beautiful, well-informed story that would run in the newspaper the next morning, and that's how you'd break the news. Now it doesn't work that way anymore. The really good stuff is never spoon-fed to you, almost never, and it's good actually, because it means when you get a really big win, you earned it. I mean, the satisfaction of having something handed to you can't be nearly as high as the satisfaction of actually fighting it out and getting the win. And as I said, nowadays, smaller things might still get fed to you on a silver platter for the simple reason that people are smart and they understand that, our mantra at the Journal to a large extent is, kind of go big or go home. And there are some things that are of, marginal interest or size that we could effectively take or leave. And people are smart and they know that to get us to do it, they got to make it easy for us. But the good, big stuff, they know that everybody wants it. Everybody's going to cover it no matter what. So you got to fight it out for that stuff. And the way that you get it is it's not the way people think. I mean, what Chip said is really just so true. The way that the sausage is made, it's really it never ceases to surprise me. The extent to which there's a misperception about how the sausage is made. It's never cut and dried, even when So we've established that it never happens that someone just calls you and says A is buying B for such and such an amount of money. Even when somebody wants to help you, it's still difficult, because the most you can ever hope for is for someone to call one of the reporters and say, you ought to take a look at such and such a company. I mean, that's usually the best start we get nowadays. More likely, it's a very vague tip from somebody that they're working on a big deal. And we've gotten pretty good over the years at taking a little sliver of information like that and building on it. Because there are a couple pieces of information there. Big, we know what big essentially means. We probably know at least one of the advisors, and then we know the history of that advisor, who they tend to work with. Maybe the person who tells us tends to gravitate to a certain industry. And then, that's really how a deal scoop typically begins. And it is often measured in, days, if not weeks, between then and the time that you get it to the finish line, effectively by just taking that sliver of information, finding someone else who knows about the deal and gives you another little sliver, then another little sliver somewhere else. And then, as I said, often, if you're lucky, you get to the finish line a week later. Very often, you don't get to the finish line at all, because you realize, even though that tip sounded great, it was a bum tip.
Yeah. Fascinating. And I've got a related question. It's great with this Q&A, because some of these questions that we talked about are popping up from subscribers. So this particular subscriber asks, and we were talking about this, Dana, there's a sort of a conflict between the process of getting things right and getting things before everybody else and fast. And when things, so how do you balance that out? The question is, in the rare cases of getting a story wrong, what went wrong? I think more germane would be, how do you balance out getting it absolutely right with getting it before everyone else? Because I think you'd agree, we can't do a story that's half right, even though the half part of it got out before everybody else. So how does that work in your mind?
No, it's a great question. I mean, it really gets to the heart of this enterprise. The thrill of getting it right and breaking a big story is tremendous. The only thing that exceeds it is the sheer horror of getting it wrong. And there, you have to balance those two. You desperately want to win and get the story for your customers and your readers and subscribers, and to not lose it to your competitor, because it's, the only thing, getting it the next in the hierarchy of things that are to be avoided. First is getting it wrong, but second is getting beaten. And you never have, you always have to go with the story before you really want to go with it, because the consequences of getting it wrong are so great. So the real art is threading that needle and figuring out when you have just enough, when you can really go with it and rest assured that you have it right. And not waiting any longer so that you risk losing it to a competitor. It's just like, I'll tell you a story. I was, we're on 6th Avenue. I'm at home now in New Jersey, but we're in New York. Our bureau is on 6th Avenue. And one night I was walking with a friend down 6th Avenue to Madison Square Garden to go to the Ranger game. And a source called me and told me that 3G, the formerly very acquisitive Brazilian investment group, was about to buy Kraft in a deal that effectively created Kraft Heinz, the big consumer company you all know well. And we are very careful here at the Journal. We pride ourselves not only on breaking the biggest deals, but also having the best track record of accuracy. That's a really important point, by the way. I shouldn't just make it passing. And we do not like to report things based on one source, no matter how good the source is. But in this case, the source also told me that I had footsteps. And if I wanted to break this thing, I needed to go right now. And I had this existential moment where I had to decide in an instant, am I gonna go for this and to avoid losing the scoop, or am I gonna take a deep breath, get another source, and risk losing it? For better or worse, I decided to go for it. And thank God it was right. But you never know with those things. And anyway, that's what makes it fun, but that's what makes it scary too.
Excellent. Yeah, for sure. And I think also a quick technical note. I think one subscriber has said that they were having trouble with the audio. This is recorded and it'll be in replay mode. You'll be able to replay it. So now getting back into the flow. Dana, we talked a little bit about a question that must be on subscribers' minds, especially those who are involved with deals themselves. How do you prevent yourself, or do you even worry about becoming part of the story yourself? Obviously, these stories move markets. They can impact the timing of a deal, for instance. How do you go about your job, knowing that what you write may have an impact on these things?
Well, the short answer to that, Chip, is we very much can have an impact and become part of the story. And the short answer is you pretty much have to put that out of your mind. I mean, we had a recent example where we broke the news that Salesforce was in talks to buy Informatica, which would have been, 10 plus billion, pretty big marquee deal. Super interesting because everything Salesforce does is interesting. We learned about it at a very sensitive moment in the negotiations. And we did the story, and Salesforce stock, we posted it one night. I think the market had already closed. And the next day, Salesforce stock plunged. And Salesforce is like a $300 billion company. And I think the stock was down almost 10%. So significantly more than the value of the deal itself. Shareholders were effectively telling Mark Benioff, the CEO of Salesforce, don't do this deal. And he had already been in hot water with activists over M&A. And sure enough, a few days later, we learned deal's dead, which I think we also broke that as well. but I don't think it's too much of a leap to say that if we didn't kill it, we certainly wounded it, potentially mortally. Obviously, we don't want to be part of the story. It's not your job as a journalist is to report the story, not be part of it. But being the story sometimes occasionally is an occupational hazard that you just can't avoid. I mean, there's another reason why we don't want to be part of the story. All else equal, we want the deals that we report on to happen for the simple reason that we like to look back with pride on something that's remembered, something that was consequential for a company. And one of the things I would add to what you said before, Chip, is that deals are important because they can transform companies. And as a reporter, you draw satisfaction from being the first to put your finger on something that transformed a company and that actually happened. And when you do a story and it kills the deal, then it suddenly becomes a non-event that's forgotten 2 days later. But again, you put that out of your mind. The goal is to break the news and to get it right, and don't worry about anything else.
Excellent. We have a question about advice you might have for journalism students. If they wanted to follow in your footsteps, be a deal reporter, is there anything you'd recommend that they do in the early parts of their career? Do you feel like you're born a deals reporter, or you can learn to be a deals reporter?
It's a great question. On some level, I think you're born to be a deals reporter because you have that competitive fire, and you're insatiable and you're stubborn. But that, beyond that, that's all you need. You could know nothing about finance or deals and transform yourself pretty quickly into a deals reporter. I'll say one good thing about deal reporting. I don't think we're going to get disintermediated by Chat GPT anytime soon. I mean, if we are, then, the robots truly are going to take over the world. Because what we do is all about human intelligence. I would just say to anybody who's thinking about it, it's really fun. I mean, I wouldn't be going on 25 years of doing this if it weren't just genuinely fun. So I would encourage anyone who's thinking about it, to pursue that.
Excellent. And you're doing my job for me, Dana, because I had two people asking specifically about AI. Has it changed the way you do your job? And it sounds like the answer is no.
No. I mean, another reason why I encourage people to think about this as a profession is it's not, there's nothing like, there's no tedious number crunching.
Right.
It's again, it's all about relationships and talking to people and trying to get information out of them. I mean, another thing I like about it is I started my career before journalism. I was on Wall Street in equity research. And, especially when you're a junior, as I was, that's all about getting into the weeds and spreadsheets and things. The reporting in general, and M&A reporting specifically, it's all about taking a view from 10,000 feet. I like to say I'm a jack of all trades and a master of none. I know a little bit about a lot of different companies. You're really looking at the big picture. This company is talking about merging with this company, and here's like the general landscape for you. That's one thing I really like about it.
Excellent. We're getting towards the bottom of the hour, so that means we have about 15 more minutes to go. I'm being flooded with questions, so I apologize. I won't be able to get to everyone's, but we'll try to take a couple more a bit later. But I did want to let Dana share maybe one or two of your favorite deals, the backstory, an anecdote or two that kind of stick to you as sort of either career highs or just one or two of those really, really fun stories, really rewarding stories.
Well, all right. I told you about one of the best already, but a few others are. So a few years ago, I can't remember when it was exactly, when Dana Mattioli, who's gone on to even greater things, was the M&A reporter. Dana has more recently been our Amazon reporter, just wrote a great book about it, which I encourage everybody to go buy and read. Dana was the M&A reporter 5 or so years ago and was incredible at it. And, one point I should make about this whole process, which just makes it kind of fun, is, and I think the story I told you about the Ranger game kind of illuminates this, but like the exciting stuff happens, the stars align always at the most inconvenient times. You're never sitting in the office when, you hit pay dirt and you're finally good to go to push the button on a story. And, as an example, Dana was on her way. She was a bridesmaid in a wedding, and she was on her way to the wedding, and somebody gave her a tip that Berkshire Hathaway was about to do a big deal. And breaking a Berkshire Hathaway deal is like a special prize because it's not easy to do. So they somehow, Warren Buffett somehow has a way of keeping his deals, especially quiet. I actually think there's a reason for it because he tends to not get involved in auctions. So usually it's just a bilateral discussion. It's a big prize to break a Berkshire Hathaway deal. And sure enough, Dana got a tip that one was coming, but there was a slight problem, which was she was about to be in a wedding. So she calls me up in a panic. I'm also on the road. I was in a McDonald's play area with my kids. And, I suddenly have to drop everything I'm doing there and try to see how we can confirm this amazing tip. And working with a colleague of ours, we managed to learn that Berkshire was looking at precision cast parts, which I believe is an airplane parts maker. It's a big company. It would have been, in fact, it was a big deal at $30 billion. I think it ended up being a terrible deal, by the way, but that's beside the point. Anyway, we get the name of the target. We flick it back to Dana, who by now is literally about to, her friend is about to walk down the aisle, and Dana ducks away, goes to another source, gets the source, and this is how things come together. Gets another source to say to her, yes, you're right, or winks and nods in some fashion that we know we're right. Berkshire's buying precision. She pings it back to me. Off she goes. She's nothing else to do with the story. We wrap the story up real quick, push the button. That was a great, fun victory. I'll never forget one of the biggest M&A deals ever, definitely one of the biggest, possibly the biggest we ever broke, was when United Technologies bought Raytheon. I think that deal ended up working out a little bit better than precision cast parts. But I remember racing down Route 95 in Providence, Rhode Island, with my son in the back seat and getting a call, again, similar to the early story I told you guys, that this is something we'd been chasing for a while. And there was a reluctant source who finally came back and said, okay, here's the deal you've been nosing around on. Oh, and guess what? Someone else is about to report it. And I have to figure out, what am I going to do here? Am I going to pull over? I certainly can't do it while I'm driving, much less on Route 95. So anyway, I managed to get to my destination and very quickly push the button on that. The last one I'll tell you guys about, because I just love this one. We broke the news that Jarden was in talks to merge with Newell Rubbermaid. Pretty big deal, both double-digit billion companies. I think it's another deal that didn't actually end up being very good. But we got that one from an errant email to a colleague who somebody didn't mean to send the email to the colleague, didn't mean to send to my colleague the email that this thing was happening. And we quickly jumped on that and broke it, which was fun.
Excellent. And, the Dana at the wedding story is sort of Wall Street Journal legend as well inside the institution. So pretty epic. Changing gears just slightly, Dana, what can you tell us about the market for deals right now? It's been a slow year. Has it been busy for you? What do you expect to happen in the second half of the calendar year? What are your thoughts? How does this year stack up to previous years?
So deals have been surprisingly quiet for a very long time. I can't remember in my career a longer fallow period. It's really been since the end of 2001. There's something that's just stuck in the machinery and, keeping it from really humming. I'm afraid that so in other words, the big deals that are really fun that we care about they're much fewer and further between than they were, say, 2001, 2099. There's good stuff. The U.S. is the biggest, M&A market in the world. Obviously, there's always something interesting, but there just isn't quite as much as you'd like. I'm afraid that's going to continue until next year. I mean, the fun thing about M&A is you never know. You never know which companies are going to merge. You never know when overall activity is going to pick up or slow down. So take this with a grain of salt. But I'm afraid that because of all the uncertainty, especially the election uncertainty, it's going to be 2025 at the earliest before activity really picks up again. I mean, the good news is we've gotten to a level where, even a slow year now is a fast year compared to what M&A levels used to be. So, we'll still have some good deals, but they won't be big. They won't be truly exciting, like the Raytheon deal I mentioned, or, Pfizer tried to buy Allergan for $120 billion. I'm afraid we're not going to have that until there's some more certainty about the leadership. And a big part of that is the antitrust environment. The antitrust environment is really tight and tough right now. And I think that's causing people to think twice about doing things. And then the other factor is private equity, which is a huge, accelerant in the deals market. Those firms have been very quiet. I mean, I think they're desperate to start doing deals again, but for whatever reason, whether it's interest rates or valuations being too high, they're largely on the sidelines. And before things can really start humming again, they've got to come off the sidelines. So anyway, hopefully next year, but who knows?
That's fascinating. And just to widen the remit slightly, what about IPOs? Is it the same situation, or is that market slightly different?
No, very, very similar. I mean, it's shown signs lately of picking up, but it's still very quiet. And I mean, it's interesting because usually you think with both M&A and IPOs, you think the two of the most important ingredients are the economy and the stock market. And the economy and the stock market are both doing pretty well. And yet, neither one of those machines is humming. So there have been some IPOs lately, but not big marquee ones. And I don't think any of our sources is predicting that that's going to change anytime soon.
Right. And again, how this comes from another subscriber, and you talked about it just now a little bit, but how big a deal or a hindrance is the U.S. election? Do you think that's the biggest blockage now to that potential deal flow, or is there a bunch of smaller things all working in that same direction?
I mean, the interest rates being as high as they are certainly doesn't help, but
right.
But there's companies are still getting around that. I personally think the election is the biggest obstacle. And in a way, it makes sense. I mean, uncertainty is like the enemy. If you're a director of a company or a CEO, and you're thinking about a deal, the last thing in the world you want is uncertainty. And what greater uncertainty can there be than who's running the country? And especially given that there's such a stark difference between the two people that are running. If you're a board or a CEO, why not wait? Because like everything could change come January.
Right. And it sounds like it's not so much the policies of either of the two candidates. It's more the uncertainty and the question about whether the landscape will change dramatically or not.
It's actually both because
Okay.
It's actually both because, the FTC is been very aggressive on, opposing deals. And if Trump becomes president, there's a belief that will change. So really, in this case, it's both. Got it.
And are there any particular industries? You talked about telecoms when you were starting out at Bloomberg as a beat reporter. I remember waves of not too long ago, pharmaceutical tie-ups. Is there any? And of course, every time oil prices are low, we're looking at the energy industry. Are there key markers of when an industry might be going into a consolidation mode or a hot M&A period?
So I personally don't think so. After all these years of doing it, I think it's like pretty much impossible to predict. And in hindsight, it's clear, but I've never had someone say, oh, this sector, say energy, it's quiet right now, but given all these factors, it's going to start consolidating. And then that actually prediction comes true. I think it's more like the factors that cause a sector to catch fire are kind of unknowable and unseeable. It's partly what makes M&A fun. It's always surprising, I find. And so, like, for example, right now, Chip, as you mentioned, energy is arguably the most exciting place for M&A right now. And I don't think anybody predicted that. I certainly didn't. I don't recall anyone saying, watch energy. It's interesting. Telecom telecom isn't what it used to be. Those companies aren't merging in big, exciting ways like they used to. The two most reliable sectors year in and year out for M&A are tech and healthcare. Both of those are very quiet right now, but under the surface, there's still activity in both, but there's not much big, exciting stuff. But when deals pick up again, those two sectors will undoubtedly lead the way.
Excellent. And we're running close to our time, so this might be our last question. But Dana, do you see any industries that have consolidated so much that it's kind of the end of history for deals for that particular sector? Again, you think of some behemoths in the energy sector. There's not a whole lot of huge companies in several sectors, and unless you're really thinking, mega deals.
I don't really think so, Chip. I mean, even you've seen two monster energy deals. I think there's still scope for more big energy deals. Possibly telecommunications, and that's why we don't see so many deals there anymore. But there are many more sectors where you see a lot of scope for consolidation. I mean, banking being the most glaring example. I mean, there's arguably thousands too many banks, and someday that will be rectified. I mean, I remember when I started M&A reporting at Bloomberg in 2005, financials was the number one M&A sector, and now it's like, forget about it. It's a complete also ran. But there are something like 5,000 banks in the U.S., and there arguably should be many fewer. So I think there are more sectors like that where you see scope for consolidation, many more than ones where you say, oh, there's no more room for consolidation. And the second that you say there's no more room for consolidation, that sector will start consolidating.
That's right. That sounds about right. Well, listen, we're very close to our time, and I don't want to be unceremoniously cut off. I appreciate and know time is valuable for our subscribers. I hope this has been helpful for them. Please do provide feedback to your Dow Jones Newswires connection. If you have any thoughts for what we should be doing next time, we'd love to entertain them. Dana, I can't thank you enough. This insight is hugely valuable, and we could talk all day about this, I'm sure, and would love to get you back in a little bit. But we really appreciate it, and appreciate everyone tuning in. And I think we're going to call that a wrap.
Thank you.
Thanks, everybody.
Thanks, everybody.